Good morning, traders. Here's your market update for today. So, starting with the US dollar index, the index extended its upward momentum in the first half of the week, supported by stabilizing interest rate expectations and easing global political uncertainty. With the Fed's next policy meeting approaching, the markets are focused on Friday's CPI report, which is the last major data point before the decision. Consensus forecasts suggest softer inflation compared with August, which could reinforce expectations of a rate cut. However, any upside surprise may strengthen the Fed's hawkish stance. Backed by policy divergence and renewed confidence in US fiscal stability, the dollar is likely to remain firm ahead of Friday's release. As long as the index holds above its 50-day moving average on the 8-hour chart, the probability of testing the psychological 100 level increases. And technically, the index continues to edge higher with its Bollinger Bands, staying above the 98.68 mid-band and the 50-day move period average at 98.59. The upper band at 99.2 aligns with the recent high of 99.56, forming a key resistance zone. A breakout above these levels could target 100 level, and the RSI near 60 shows moderate bullish momentum without overbought signals, though limited volume warns of short-term fluctuations. And on the downside, supports are clustered at 98.6, which is the last line of defense before 98 level. Moving to WTI spot crude oil. The oil traded around 59.15 per barrel on Wednesday, rebounding more than 2.5% as investors reassessed supply glut fears and sought clarity on trade developments. President Trump may be strengthening his tactics in an effort to end the war in Ukraine, so sanctions that truly bite Russian oil production. And relatively low US crude and distillate inventories are offering some short term support, but slowing global demand remains a drag. As long as supply growth continues to outpace demand recovery, the prices are likely to stay range bound between $55 and $60 per barrel. And technically, WTI crude oil remains in a downward trend. Failure to stay above the $60 psychological level could extend losses towards 56.35 and 55.14, which are the key supports. A break below could trigger further passive sellings. And conversely, if the sentiment improves or OPEC signals production restraint, the resistance emerged near 59.29 and 60. And overall, both fundamentals and chart structure still favors a bearish bias. Then, spot gold. Gold retreated nearly 6% earlier this week after testing its record high near 43.91, falling sharply to 40.86 per ounce. It briefly tested at 4,004 midweek before rebounding in a V-shaped move to around 4,100. A stronger dollar and improved global sentiment triggered heavy profit taking after gold's sharp rally. And optimism over US China trade talks and easing risk aversion have temporarily reduced demand for safe haven assets. But still, expectations of a more accommodative Fed and lingering geopolitical uncertainty continues to underpin a longer-term bullish sentiment. On the 8-hour chart, gold has likely formed a double top pattern at 43.80 and 43.91, suggesting short-term consolidation. The resistance sits at 41.86, at the neckline of the formation, and a sustained close below it would confirm a bearish reversal. RSI is trending lower, supporting a cautious outlook. Key support lies at 4004 and 4000, followed by 3963. If buyers regain strength above 4186, gold could re-challenge 4250 and 4300. Last but not least, Australian dollar. The Aussie dollar extended its decline during Wednesday's Asian section, trading near 64.90. Selling pressure came from foreign outflows and weakness in commodity-linked equities, including gold and major miners. However, optimism surrounding progress in the US-Australia trade partnership is limiting the downside momentum. The US government shutdown, now entering its fourth week, has also added uncertainty by delaying key US economic data releases, such as the non farm payrolls, raising questions over the Fed's near term guidance. And technically, Australian dollar remains capped by the 100-day and 55-day moving average at 65.33 and 65.50. A break above could open the path to 65.72 and the psychological 66 cents level. The RSI around 42 signals mild bearish momentum, while the ADX above 20 suggests a strengthening trend. Support lies at 64.40 and 64.32, followed by 64 cents. So that concludes today's morning review. Watch for Friday's CPI data, Fed remarks, and OPEC supply guidance are all key catalysts for this week's volatility. And trade safe. I will see you in the next update.